What is up, everyone? Welcome back to the trading world, where I cover all kinds of real trades you can make in the NASDAQ futures market every single day to make real money. And I also cover the market as a whole, all kinds of trades on Twitter, and trades that I found in the market as well. If you guys like this type of content, definitely consider leaving a like, subscribing, following me on X, and checking out my completely free Discord. The link to that is in my bio. As always, guys, all I gotta do, sit back, watch, and relax, and I'm gonna be covering all kinds of trades. Specifically, today I'm gonna actually try and remember to focus to also talk about trades on Twitter, because I do think it's important to never get tunnel vision and to learn from others as well. So, the day as a whole, right? The higher time frame had been bullish. It had been in this higher time frame buy model for quite some time. We had the SMT at these lows. We swept out the lows. So we were in a higher time frame buy model, essentially slowly drawing towards these low resistance highs and then all-time highs. And what happened yesterday is we had a PPI Newswick all the way up here. And these are going to be amazing draws on liquidity. And you can see, meaning draw on liquidity. If you don't know what draw on liquidity means, that essentially means the market is going to want to come back to this specific high because it was the high of a news event. It was the high of producer price index from yesterday. So this was a very, very strong target for the market to go back to. So producer price index high. And you can see how the market perfectly comes back to that. So today we had CPI, and so once again, keep in mind that this was kind of the spot market was drawing to, because not only was this a PPI high, but it was also a previous day's high, right? So two incredibly strong draws on liquidity at the same exact point, a news event high and a previous day's high. And so you can see that essentially every single time we try and go lower, we fail and we get stopped at a gap. Fail here, right? This is essentially a balanced price range, another balanced price range, and then another gap here. And then eventually we make our way up towards that PPI high. Now let's talk about specific trades you could have taken within here, right? We had CPI come out, very, very crazy wick here. And yeah, wow, that was insane. We took out all of these overnight lows in essentially 5 seconds. And yeah, at this point, I'm not gonna lie, this 8:30 before market open, it was a little hard to trade. There wasn't anything super obvious within here. Then we consolidate. And the first two trades kind of come once we sweep out a high off to the left of the screen here. We sweep out this high into a gap, right? This is a 15-minute for value gap. And then we had that range below. So even though we were bullish, we did have this gap that we had to get through. And that was essentially the first area that we should have been aware that the market could get stopped, right? The market might not continue straight there. So the trade I had marked out from that gap to go back to that range was, I had essentially, the idea here is we had that 15-minute gap, 15-minute balanced price range. We swept out essentially 4-hour highs and then 1-minute change in state of delivery. And then we just have a giant range of lows below. And you can see entering on the close here down to those lows, essentially instant TP in 1 minute. And very, very nice trade in my opinion. Once again, do your own backtesting. Do what makes sense to you, but I like this a lot. 15-minute gap, 1-minute change in state. And you can also enter this on the retest. And I also wanted to show how we do hit max extension of this model, where we go from the low to the high of this order block down 4 projections, which is typically the max extension, where you will see a lot of time that's where the market maker models will end, right? And you can see that max extension got hit. Then similarly, Hydra takes a very similar trade to this, and I thought this was really, really good as well. Once again, guys, trading, it's just about getting on side. It's about identifying the manipulation and then getting on side with the distribution. How you do that a lot of it comes down to your own interpretation of the candles and the charts, right? Same thing. Oh, and also we had a bearish SMT, right? We sweep out the high, so he marks this out with a circle. That's the manipulation. This is the accumulation. The important part is identify the accumulation, identify the manipulation, then essentially marking out all of these candles as one, because conceptualize this. If all these candles were one on the higher time frame, this would just be one fair value gap. So this is an inversion for value gap here. So what he does is he just enters on the retest of that inversion for value gap. I call these Jan entries, where you take an entry. If you don't like the RR on the initial trade, you just wait for a little bit of a retest. And you stop loss essentially at the end of the body of the momentum candle, which I think is absolutely brilliant. And then, yeah, we run through this range and we continue down to this swing low here. Once again, guys, these markets, it's about conceptualizing the accumulation, manipulation, distribution. It's not going to be like, oh, you have to. Anyone who's trading pattern trading is going to get wrecked in these markets, because these markets aren't going to respect your patterns. You just have to conceptualize where people are going to get stopped out, identify where we had our range of price, identify where we manipulated, and then get on side to target the stop losses at the accumulation range and beyond, right? Conceptualize that whole idea. Conceptualize accumulation, conceptualize manipulation, get on side with distribution, and you can see it just enters two cons here, one here, one here. Very, very solid trade. I guess I'm going to jump ahead, actually. I think this was solid as well. This was right at the end of what would be my live trading window, because I only go to 11:10 Eastern, but this was during the 10:50 to 11:10 macro, so key time. I just made a video on macros, guys. If you guys haven't watched that, definitely go check that out. But it's when you can expect your trade to form. And guys, this was super, super light bulb. Instant V-shaped recovery. We close above this old gap here. Once we get this inversion, stop loss goes below the inversion for value gap, or whatever makes sense to you, right? Could be lower, could be higher, but essentially this is the trade, right? And then we had that really, really nice strong liquidity, like we said before, which was that previous day's high and PPI high. So that happens right here. And this was more obvious as a 2-minute inversion for value gap here. And once again, the key is that this is in line with our bias. Our bias is we're essentially expecting the market to hit this point because the bias is bullish, and until we hit this point, the market's likely going to continue the trend that it's already been in, at the least. And you can see we inverse this 2-minute for value gap, and then we go up to our PPI high. And Hydra's not the only person that talks about this. Trader Diego talks about this as well. He puts stop loss at the swing low. Personally, I don't do that. I feel like most of the time you don't need your stop loss all the way there. But if you want to be super conservative, you can do that, and that ended up working out really well for him. So cool. I mean, nothing against doing stop loss at the swing low. It's just all about your own back testing and what makes sense to you. He also marks out we're delivering from this order block, which is this down close candle. And yeah, very clear accumulation, manipulation, and then distribution. Once again, the key is get on side with that distribution. That's the key. Then, yeah, essentially, like I said, every single time we came down, the market respected these gaps, right? And I'll go over a couple more trades that I noticed. I noticed that we had, let's see here, a really nice 30-second 2022 model. I think this was brilliant, where, that's not the one I want to show. This is the normal one, where essentially we get SMT with this low into a 15-minute gap. One thing that's cool about this 15-minute gap is, one thing you may not realize about this gap, but it's true, is, I guess I didn't screenshot it. I'll just show you, right? If I go to the 15-minute, we have this gap here. Look at how PPI drills through it, but the bodies still respect it. The bodies respect it once, right here, and then respect it again right here. The wicks do the damage, the bodies tell the story. And so this gap, a lot of people would think, oh, it's already been used because we've already wicked through everything and it was already used once. But no, we can still actually use this 15-minute gap as a key level for our trade because our bias is still bullish here. So this 15-minute gap is still valid even though we delivered and swept all these lows. Look at how the bodies respected it. There's no reason to think that this 15-minute gap is not still working on price. So we have this 15-minute gap here, and then once again we ended up getting SMT with this low. So once again, accumulation, SMT, and I'll pull up the screenshot again. Accumulation, SMT. Then on the this is on the 30-second, right? We have a sweep of that low with SMT, inversion for value gap, break of structure with displacement. Once again, the key is displacement. You want to see the market moving with momentum towards where it wants to go. We get that break of structure with displacement, retrace to a fair value gap. You can take this as an inducement, but you can also just take this as well, that's the change state delivery version. Hang on, that's not it. Where's the regular one? Anyway, yeah, here's the regular one. Okay, the regular one is once we tap the fair value gap the very first time, you can enter right there, right there. Now you have to be quick on your feet to see that one. If you don't see that one, you can enter on the inducement. And I would not put stop loss there. I'd probably put stop loss there. But because it's an inducement, could you be more aggressive theoretically? Sure, you could. And then notice, guys, notice what time this inducement into this 2022 gap on the 30-second, right? Notice what time this inducement into the 2022 gap happens. Right at 9:50, right at the start of the macro. And essentially the macro is gonna end not when the actual time ends, but when we've hit our objective for the macro, which was this high, right? So the macro actually ends right here, but you got to take profit at the high. You don't just hold till the end of the macro. You take profit at the logical draw on liquidity, which was this high. So inducement, 30-second 2022 gap. Once again, liquidity sweep, break of structure, retrace to a fair value gap, and then we have a consolidation above, and then we expand up there. One thing I really liked about today was we had the first presented for value gap, which got inversed. Once again, guys, with the first presented for value gap, you can't blindly just enter it short or long. You have to play the narrative for the day of the inverse for value gap and then trade it accordingly. So once again, right, if my drawn liquidity is this high, I'm basically saying I'm expecting the first presented for value gap to get inversed and then deliver to this high, right? It's all about the drawn liquidity. And so I know some people on my video about the first presented for value gap were like, okay, so you're basically saying nothing because it can either be inversed or respected. And no, I'm not saying nothing. I'm saying it depends based off of the drawn liquidity. Where is the market drawing to? Here you can see the market's drawing to this high, right? So we inverse the first presented for value gap. Now we come back to it. And one way I would like to take this trade, maybe it's not necessarily for everyone, but I really like aligning the first presented for value gap with the 5-second accumulation, manipulation. We get a 5-second change of state. This is just very obvious low resistance highs here. And then we run up to that high, which is also, I've never talked about this on my channel before, but it's called the SPOOs, which is specifically the 9:30 to 10 a.m. That opening range is called actually it's 9:30 to 10:30, but also 9:30 to 10 because 9:30 to 10 has the highest volume. So anyway, 9:30 to 10:30 is called the opening range, right? So here you can see, here's 9:30, 9:30. So 9:30 to 10:30 is the opening range. Oh, great, why did that? So that would be from here to here. This is called the opening range. So this is gonna have essentially a ton of liquidity at the low and the high. Um, it's called the SPOOs. Technically, it's only for ES to call it the SPOOs, but I'm gonna call it the SPOOs anyways. And then the 9:30 to 10 o'clock range is also important because this range is gonna have the highest amount of volume. It's just like how our session liquidity pools, since they have a lot of high volume, they're gonna be the highs and lows of those are gonna be drawn too. Same thing with 9:30 to 10 and 9:30 to 10:30. This is gonna be a super high volume area where you want to watch the highs and lows because they're going to have a lot of stop losses above and below the range. So hopefully that made sense. But anyway, 9:30 to 10 o'clock high right here. We get 5-second chance to delivery off the first minute for value gap, and we run up to that 9:30 to 10 o'clock high. Bang, right? Super clean. So once again, guys, this type of trade is not for everyone, but I did want to mark it out because to me, it's a trade that makes sense according to my back testing, and I thought I might as well share it with you guys. But once again, not necessarily for everyone. Amos, basically a beautiful trend continuation trade. He identified the manipulation. He identified that we broke structure and inverse this fair value gap. So we're obviously drawing towards buy side liquidity. And I don't totally understand Amas's model yet, but what I do understand is he just basically looks for an order block within the trend and then enters on the order block and then targets the next high. And it's super simple, but hey, simple will pay the bills, dude. So just he looks for the trend, looks for the liquidity sweep, the break of structure, finds an order block within that trend, enters on the order block, and then delivers it to the next swing high. And that's a beautiful way to trade. Good job, Amos. I think that's what he does. Once again, I got to do some more research into it. But yeah, and then Tanja trades, beautiful from the high to the low. We deliver down. Once again, we had not hit that PPI high yet. We deliver down to optimal trade entry, which is the 0.6, 0.7, 0.78. We hit that perfectly, which is also a gap. So what is this? This is a 2022 gap. So Tanja trades the 2022 model. And so Tanja got in right at this gap. Once again, liquidity sweep, I guess, of this low. Then we broke structure, then retracement to 0.61, which aligned with this 2022 gap, and then delivery within the trend continuation to previous day's high. Not a trade I would necessarily see, but that's why I like reviewing other people's trades because I learn a lot. And yeah, super cool stuff, guys. Hydra took that one. These two trades are both super beautiful. Dino took this one. This was, I think, like a 2 or 3 minute inversion. This is not necessarily a trade that I would take according to my back testing, but you know what? We'll show it anyways. We had probably a 3-minute inversion here. 3-minute inversion. Maybe it was a 5-minute inversion. Yeah, it's looking like this was a 5-minute inversion, and he targeted the data high, and also, I guess, the high over there. So, solid trade, honestly, right? Just a simple inverse value gap. That's how Dino trades. Just these simple inverse value gaps. Inversion, take profit at the data high, and then the external high. I think that, simplicity is going to pay the bills, guys. So I like that. We also just, very obvious, like, sweep of Asia and London. We have Asia down here and London down here somewhere. Yeah, Asia right here, London right here. We sweep out both of them. And then we deliver to the opposing liquidity pool, right? So accumulation, the entire thing is accumulation, manipulation, and then 5-minute inverse value gap, and then getting in with distribution to the data high and to this high. Beautiful trade, Dino. Great job. And yeah, guys, I think that mostly covers it. I could look through here maybe a little bit more. There's maybe a little bit more things I could talk about, but I think we're pretty much good on the day. Yeah, guys, the key is always identify accumulation, identify manipulation, whether that be with SMT or not, and then use an entry model to get onside with distribution, right? Whether that be changes to delivery, an inversion for value gap, right? Inversion for value gap. Whether that be, the way Amos does it, where he just looks once, he waits for it to be super obvious that we're delivering higher, and then he just enters on an order block. Guys, there's a billion ways to trade these markets, but at the end of the day, it all comes back to AMD, right? So always keep that in mind, that the market's just going to move off of AMD, and your job is to enter to get onside with it. So with that, hopefully you guys enjoyed this video, and yeah, see you guys in the next one. Peace out.